The Ottawa real estate market is shifting, and depending on what section of the market you're looking in, you're going to have a very different experience if you're looking to buy or sell a home in the latter half of 2025. But regardless of what section of the market you're looking at, it's important to look past the headlines and drill down into the individual market section, whether that's a freehold property or a condominium. If you look back over just the last few months, you can find headlines saying anything from inventory is skyrocketing to prices are surging, and it can be really confusing if you're just passively paying attention to what's going on in the news. So today we're going to do an overview of what's going on overall in the Ottawa market, as well as drill down a little bit deeper as to what's going on in the three different categories that CREA, the Canadian Real Estate Association, and the Ottawa Real Estate Board track with their monthly stats. Those three categories are single-family homes, which encompass anything from detached properties to semi-detached properties. Townhouses, which can be a little bit confusing because it includes both freehold townhouses and condominium townhouses. And the last category is apartment-style condominiums, which is kind of the stereotypical condo that you're probably picturing when you're thinking of a condominium building. Now, to start off with, we are going to look at the headline number, which is what happened in the Ottawa real estate market generally. This includes townhouses, condominiums, and single-family homes. So you can see we have a sales activity here of 1,602 properties, which is not too bad. It's up 10.6% from 2024, which was also a pretty slow year, but it's an increase from the previous couple of years as well. As far as number of new listings, that's also been increasing pretty steadily. We're looking at 2,933 new listings total, which is up almost 14% from last year and is up almost 20% from 2023. As far as the active listings we had at the end of the month, we're looking at 4,350, which is up 11.6%. And this is a trend we're seeing across the board. We are seeing more listing activity, and listings are tending to sit for a little bit longer. You can see here, compared to 2024, we're up a pretty modest 11.6%. It's not insignificant, but it's not crazy. But if you compare it to 2023, 2022, and back in 2020, we're getting into 62%, 70%, and compared to 2020, we're up 201% active listings. So that just goes to show you how low the inventory was back in those years and how it's kind of getting back to a more normal amount now. Now, one of my favorite stats to look at is months of inventory, and we can see this actually hasn't changed from 2024 to 2025 at all. Months of inventory is basically the stat that we get when we take the number of active listings that are sitting on the market at the end of a given period, and we divide that by the sales activity or sales volume for that same period. So if we take the 4,350 divided by 1,602, gives us 2.7 months of inventory, which is basically an indicator of how long it would take for us to completely sell out of inventory if we were to stop listing properties right now. This statistic is important because this is what we use to decide whether or not it's a buyer's market, a seller's market, or a balanced market. If it's anything under 3 months, it's considered a seller's market, which is much more favorable to people listing their properties. If it's 4 to 6 months, we're considered to be in a balanced market, which is pretty fair to everybody. And if we get to 6+ months of inventory, we are in a buyer's market where buyers have more leverage and properties are sitting on the market for a little bit longer. Now, things haven't changed between 2024 and 2025, but we can see the trend from 2020 onward is creeping up. We were at 0.8 in 2020, 1.9, went down a little bit in 2023 to 1.8, and then up to 2.7. So we want to keep an eye on that statistic because it is a very good measure as to the directionality of the market. The average price for a property in Ottawa is $723,000, median price $665, and the median days on market is about 19 days, which has also climbed slightly from last year. Now, if we take a look at just that number, it looks like a market that's slowing down, but nothing that's super unusual. What gets interesting is when we drill down and look at the individual market segments. So if we look at the single-family home numbers, it actually looks like a pretty decent market. Sales volume of 895, which up 16.4% from 2024, up almost 25% from 2023. The number of new listings, 1,582, which is up 11.5%, but that's not a bad thing. We could use more inventory. That's what we've been saying for the last few years. Active listings that were on the market at the end of the month is sitting at 2,215, which is only up under 1% from last year. Nothing too concerning there. Months of inventory, we're looking at 2.5%, which is still technically in seller's market territory. And it's actually a little bit down from last year. So things are actually moving a little bit faster in June of 2025 than they were in June of 2024. Now, bear in mind, June of 2024 was a pretty quiet year, but that's still an encouraging trend. The average price is $871,877, up 5.5% from the previous year. Now, sales to list price ratio is a great stat to look at because it gives you an idea of how busy the market is. If we're seeing properties regularly sell over the listing price like we were back in 2020 and 2022, then we know that the market is pretty overheated. There's probably bidding wars if properties are going over the list price, and that is not a good time for buyers. Now here in 2025, we're looking at 98.7%, which is pretty normal, I would say. People are listing their price a little bit above the market value. It's being negotiated down a percent or two, and they're finding a happy medium there. Now, if we go into the townhouse section, and again, this covers both freehold townhouses and condominium townhouses, we're looking at a sales volume of 467,000, up 16.8% from the previous year. New listings are up 37%, which is a serious increase. Months of inventory has gone up pretty considerably. In June 2024, we were looking at 1.7 months of inventory, and we're now up to 2.3. The median sold price in this segment is actually down 1.4%. And the list to sold price ratio is sitting pretty close to where these single family homes were sitting at 98.8%. Median days on market is a little bit longer at 20. And as far as the average price, if you look at the graph at the bottom, you can see overall, there's definitely been some movement over the last couple of years. We've got the big humps in 2022, quieted down in 2023. There have been some little ups and downs since then, but overall we are staying pretty flat from a pricing perspective. Now, so far we've been looking at the categories that are more of the freehold style properties. The townhouse category does include some townhouse condos, but it still paints a much better picture than the category we're about to look at, which is the apartment style condos. Looking at the apartment style condos, we see a sales activity of 207 properties sold in June 2025. This is a significant decrease of 20.7% from the previous year and 35%, or almost 35% lower than June 2023. Also seeing a decrease in the number of new listings in this category. We're down 12% from June of 2024. Active listings sitting on the market at the end of the month is up 3.4% from last year, which is a little bit surprising because the new listings are down 12%. So we have fewer properties hitting the market every month, but we do have an increase in properties sitting at the end of the month. And this starts to make sense if we jump down to the bottom looking at the median days on market, which is up substantially from last year to 36 days on average. So it takes more than a month to sell the average condo unit in Ottawa. And that's only the ones that do sell, because as we can see, there are some that are sitting on the market month after month for quite a while. The list to sold price ratio is also lower at 97.4%, which indicates that buyers have a little bit more leverage when they're negotiating on price. And for months of inventory, we're seeing a huge increase from 3.2 to 4.2. So technically, as we were talking about before with the months of inventory, this puts us into a balanced market because it's 4 to 6 months is the balanced market. But if you look at the directionality over the last couple of years, it's been a big increase from 1.5 in 2023 to 3.2, a huge jump in 2024, and then another big jump to 4.2 in 2025. So the trend is that we are moving towards a buyer's market with condos, and I can tell you from experience that that is how the condo market feels right now from a buyer and seller perspective. If you're a seller, you have to be priced sharply and your unit has to present well. If you're a buyer looking in this section of the market, you are spoiled for choice because listings are sitting there for quite a while. You can take your time, do your due diligence, and probably negotiate yourself a pretty good deal if you're looking to stay there for a long time. If we're looking at the average price, I would pay more attention to the blue line here because this is the benchmark price that the home price index uses, and it controls for outliers. You can see there's been a big spike in the spring for the average price of a condo that sold, but that's likely due to some very high-priced units that have been selling and dragging up the average for those months. The last thing I think it's pretty important to mention here and to keep in mind when you're comparing 2025 to 2024 is the interest rate environment that we are in. If we look at the benchmark interest rate from the Bank of Canada on June 5th, 2024, it's 4.75. It was just starting to go down around that time from the highs that it had been up to since 2023. And if we compare that to the interest rate environment at the end of May in 2025, we are at 2.75%, which is considerably lower. As you probably know, the Bank of Canada lowers the interest rate in order to stimulate activity in the market. So it's a little bit concerning to see the condo market as sluggish as it is, despite the lower interest rates, which normally stimulates more activity. So overall, even though it looks like the market is doing pretty okay if you look at just the headline numbers, and it is doing okay if you're looking at the single family homes or the townhomes, when you drill down and look at the condo market, it is a little bit concerning. Not necessarily in the long term. I do think there's actually potential if you're planning to hold one of these condo units and you've got a good floor plan and a good building, you're looking to hold it for a long time or live there for a long time. I think now is actually a pretty decent time to pick up a property if you are considering that section of the market. We are still looking at a lower inventory market in Ottawa, and those are the most affordable units. There's also a lot of news going on about the condo market in Toronto and in Vancouver, and we are definitely not in that dire of a situation in Ottawa. But it's definitely worth noting that things have moved in a negative direction for the condo market in the last 12 months or so. I hope this video was helpful. If you have any questions whatsoever, please never be shy to reach out. And if you have any comments, concerns, or feel like I've missed something, don't be shy to leave something in the comments section. Thanks so much. I hope you have a great July, and I will see you at the beginning of August. Take care.